Welcome to Pro News Weekly. Let's dive into the latest updates on the financial markets. The dollar rose on facts, stock indices rode a roller coaster, gold broke records, and Bitcoin withstood competition from altcoins. Buy the rumors, sell the facts. The US dollar was actively sold ahead of the announcement of the Fed meeting results. Investors expected the central bank to cut rates, with the FOMC's updated forecasts showing 2 more acts of monetary expansion before the end of 2025, and the number of dissenters increasing from 2 in July to 3. In reality, only the first 2 expectations were met. The September forecast did indeed include 2 more rate cuts this year. The Fed lowered the rate by 25 basis points to 4.25%, with 11 votes out of 12. Only the recently appointed president, Stephen Moran, voted for a 50 basis point cut. However, after the initial downward impulse, the USD index went on a counterattack. The US dollar's success is primarily due to the closing of short positions. Fundamentals still do not favor the dollar. The Fed, as it did at the end of last year, will cut rates. The ECB and the Bank of England will leave them unchanged, while the Bank of Japan may raise them. Divergence in monetary policy encourages a strategy of selling the dollar's rebounds. Buying the dips in the S&P 500 is the most popular strategy in 2025. Bulls are lining up to pick up American stocks after the broad stock index fell, following the September FOMC meeting and Jerome Powell's comments. According to him, the Fed cannot avoid taking risks in a bilateral risk environment. Over the past 50 years, the S&P 500 has risen in 13 out of 16 cases over a 6-week horizon if 2 conditions were met. The Fed cut rates, and the broad stock index was within 1% of its record high. History inspires bulls in U.S. stocks. At the same time, it is not wise to talk about a bubble. Over the past 12 months, the S&P 500 Information Technology Index has risen 27%, and the profits of its constituent issuers have risen 26.9%. For the rest of the broad stock index, these figures are 13% and 6.4%. If the market is overbought, it is outside of technology companies. Gold hit 3 dozen record highs in 2025 and exceeded $3,700 per ounce for the first time in history. The precious metal surpassed its inflation-adjusted record set in 1980 and has risen by more than 40% since the beginning of January. This has rarely happened, even during times of global economic crisis and pandemic. Only in 1979, against the backdrop of turmoil in the energy markets and stagflation in the US, was the increase greater than plus 140%. Central banks continue to buy bullion as part of the process of de-dollarization and diversification of gold and foreign exchange reserves. ETF stocks have grown by 43% since the beginning of the year. In terms of value, they have reached a record high. Precious metals are benefiting from a favorable background of falling treasury yields and a weakening US dollar due to the Fed's renewed cycle of monetary expansion. Deutsche Bank has raised its forecast for the average price of gold in 2026 to $4,000 per ounce. The main risks to this scenario are the Fed's prolonged pause next year after a series of rate cuts in 2025 and seasonal weakness in precious metals in the final quarters of the year. Goldman Sachs does not rule out a rally to 5,000. Bitcoin offers stability and simplicity, while altcoins offer utility, diversification, and innovation. Competition between these cryptocurrencies is intensifying, but this time, the rivalry is not preventing all digital assets from growing simultaneously. 190 Bitcoin-focused public companies, led by Michael Saylor's strategy, have accumulated $116 billion worth of tokens. However, their Ethereum-based competitors have raised more than $16 billion in 2025 alone. They are betting on the higher volatility of altcoins, and so far it's working. The resumption of the Fed's rate-cutting cycle, the associated stock market rally, the weakening of the dollar and the decline in treasury bond yields create a favorable backdrop for Bitcoin, allowing it to compete with Ethereum and other altcoins. The loyalty of government authorities is giving cryptocurrency fans cause for optimism. The Securities and Exchange Commission has approved a request from CBOE, NASDAQ, and NYSE to simplify the listing of crypto asset-related ETFs. Key economic events for the 4th week of autumn will be the release of data on business activity in various countries around the world, and the publication of data on the Personal Consumption Expenditure Index, the Fed's preferred inflation indicator. So far, the European economy has shown remarkable resilience to Donald Trump's tariffs. This factor, along with the cooling of the US job market, has been an important driver of the EURUSD's rise to a 4-year high. The latest PMI data could either help or hurt the euro. Although the Fed has decided to pay more attention to the labor market, accelerating inflation could change the balance of power within the FOMC. There is already a split there. 7 of the 19 members of the committee do not see any further cuts in the federal funds rate in 2025, while 2 expect only 1 cut. Therefore, numerous speeches by Fed representatives in the week leading up to the 26th of September could seriously shake up the financial markets. Investors will also continue to monitor geopolitics and the French crisis. Follow the updates on global markets in Pro News Weekly. Like, share, and subscribe.